Phil Muscatello and Finpods are authorised reps of Money Sherpa. The information in this podcast is general in nature and doesn't take into account your personal situation. Shares for beginners. Weekend Watchlist.
G'day and welcome back to Shares for Beginners Weekend Watchlist, where we'll be taking a close look at an individual company, sector or ETF that you may wish to consider for your watchlist. It's not a recommendation to buy, but a way for you to learn how Stockopedia screens for value. Joining me today is Elio D'Amato, and we're talking Pilbara Minerals ASX code PLS. G'day, Elio.
Yeah, g'day, Phil.
Tell us about Pilbara Minerals, or as I say, not another lithium stock.
Well, I've decided to bring the Grand Poobah, top of the tree, as it were, in regards to lithium stocks. Look, Pilbara Minerals is a hard rock lithium producer. The Pilgangoora project hosts one of the world's largest hard rock lithium deposits, basically in the world. Now, I'm not going to go into the geology too much, Phil, but lithium can be either hard rock or brine. Now, brine involves finding saline groundwater, which is pumped to the surface and then dissolved, versus hard rock, which is basically mined using traditional methods. Now,
it's a bit like in Chile, isn't it? Chilean lithium is that, where you've got those huge salt flats.
Yeah, very much so, exactly. So Australia has the world's largest hard rock deposit, and hard rock is more flexible because basically hard rock can be processed into either lithium hydroxide, which is used in ion batteries, or lithium carbonate. Now, brines initially can only be done in carbonate, but then they need further processing to eventually get them to hydroxide stage. So despite the increased costs that brine offer, the other benefits of hard rock include the fact that it contains higher lithium content and can be processed faster than what brine is. So very advantageous. But back to the company itself, though. It has two production facilities. It has the Pilgan plant up in the north and the Nugarju plant in the south. And the overall project is located only 120 kilometres from Port Hedland, and it's well serviced by road, rail, and of course, port infrastructure. So unlike many lithium stories, these guys are actually in production. And I think that's an important distinction because many of the lithium stories or stocks, as you referred to at the start there, are just dreamers at this stage. They're currently driving around, inevitably, the Pilbara themselves, digging holes, trying to find the next big, massive thing. Whereas Pilbara's already in and amongst it. They've been benefiting from the boom in lithium demand globally, not just now, but what they've been doing over the last, 12 months, 24 months, and even beyond then. And they were really able to capitalise on record spodumene prices when they were around last year. Now, lithium prices have eased a little bit since then. But look, the business is self-funded. It's not beholden to rising costs and, cautious speculators that might sell the price down. It's worth $14 billion in terms of market cap. It's an ASX 50 company, and it's currently producing over 620,000 tonnes of spodumene concentrate every single year. And by no means are they a small player. They provide around 8% of the world's total lithium, according to them. And their sales model is actually quite interesting. They have the standard offtake agreements, which are just contract deals with big battery makers and big users of batteries. But then again, they also have what they call their battery metals exchange, where often they will just basically put up some lithium up for auction and it goes to the highest bidder. And last year, when spodumene prices were going through the roof, this was incredibly lucrative and often saw them realise prices much higher than the current spot price.
And I believe that Australia is the second largest producer of lithium in the world at the moment.
Yeah, that's correct. We are a very big player in this space, and many of the large global companies want to be involved with Australia and our lithium, not only for its quality, but also our safe jurisdiction and what we're able to deliver as per contracts that we adhere to. So I think it's fair to suggest, though, that the type of lithium that we produce really is focused more on that hard rock because it tends to be more lucrative, it's more efficient, it tends to be better quality and is highly prized by the external market. The rest of the world does have quite a bit. You spoke of Chile, for example. You've got Argentina as well. There's a number of countries in South America that actually do deliver quite a significant amount of brine to the broader market. But in terms of hard rock, we're number one, which, to be frank, is the most prized and most valuable anyway. So good on us.
I also noticed when I looked at this morning on Stockopedia that it's the third most viewed company in the community over the last 7 days. What does that kind of signal to you?
Well, look, it's pretty obvious. I mean, Pilbara's what we call internally at Stockopedia a super stock. It has an overall stock rank of 91, which puts it in the upper sphere of companies on our exchange. Now, it's important for me to remind everyone that our scoring system is a relative measure. So all companies are benchmarked against one another by methods that are not devised by us. I mean, rather, we use the strategies and styles of investing giants who over the years have used various different ratios to measure companies and their factor performance. But obviously, with an overall score of 91, they're up in the top 10%. Obviously, and we'll get to this in a moment when we talk about the actual results of the business and its current performance. But its price has experienced a little bit of weakness in recent times, and investors may very well be looking at the quality of this stock, its long-term trajectory, and the role that it's going to play in the new green energy future, and may be thinking that there is possibly a bit of an opportunity there, given the fact that they are operating so well.
So what's got you interested, and what's it showing up on the Stockopedia screen?
Yeah, so breaking down that overall score of 91, Phil, I'll start with quality, which is at 98. So when you look at the key metrics there of return on capital, return on equity, low bankruptcy risk, margins, cash flow, all are very strong. So the 2023 full year report it was stellar. The set of numbers, you see a company grow its revenues by over 200%, its profit by over 300% to $2.4 billion. You know that that's underlying a quality business. The other thing that's actually quite attractive with it is, given those strong numbers that it was able to produce, that value also rates quite solidly at 87. So it's still within the top 20% of the broader market in terms of value. So we've got a high quality stock that represents value. And we measure value by metrics such as, PE, which is sitting at around 9. You've got EV to EBITDA, which is below 3. You've got price to free cash flow, which is currently at around 4. So generally, quality value ranks highly. But then, as I alluded to, momentum is where it's currently falling down. And we actually have that ranked as 51. And there's a few reasons for this occurring. So from a price perspective, on a one-year basis, the stock has underperformed the All Ordinaries Index by some 25%. There has been some strong periods of underperformance as well, particularly over the last month and the last 3 months. And the stock is currently trading below its 50-day and 200-day moving average. And much of that weakness has to do also with analyst revisions, which is another component of our momentum rank. So after the full year result was delivered, despite the fact that it was impressive and everyone was cheering, the market wanted a little bit more, if you can believe that, Phil. So lithium prices have also fallen from their 2022 peak. So with a few downgrades on the back of their performance, plus the fact that lithium prices have come down, we've seen EPS downgrades for 2024 and 2025, and that impacts the overall score. So as a price taker, you need to appreciate and understand that Pilbara is somewhat beholden to the price of lithium. And as lithium goes up and down, given the fact now that they are producing, that's going to impact share price.
Are you picking shares on gut instinct, buying on press tips or rumours? Do you struggle to find the time to keep up with the research and analysis that goes into evaluating potential stocks? Stockopedia are pleased to offer a special deal to listeners of this podcast, a 14-day free trial and a 10% discount on the first year of membership. Sign up now at y.stockopedia.com/SFB. There's no better time to access the most comprehensive, easy-to-use investing toolbox for DIY share investors. 10% off, 14-day free trial and a 30-day money-back guarantee. That's y.stockopedia.com/SFB. It's also worth reflecting, isn't it, about what the concept of value means. And it really comes back to Warren Buffett, like trying to find good companies at a cheap price. Is that the way it's defined and how Stockopedia looks at the concept of value, or is it more nuanced than that?
Yeah, it is a little bit more nuanced than that because, of course, that worked for Warren Buffett. But many people have tried to replicate that method over the years and journeys, and they've never been quite able to be as successful. Well, I haven't yet, and I tried a very long time to try to replicate that. Hopefully, I would say on the way, but I'm definitely not there at that point yet.
We're all on the journey together, aren't we?
But we certainly are. That's the fun part of it all. But I think it's important for me that it's not important. It shouldn't be for us to be dogmatic in regards to how we should go about investing. I mean, you have some wonderful guests on your podcast, Phil, who all have various different approaches to investing and all have been successful in their own right. So whether you want to be a quality investor where you're looking at, how the actual company performs, whether you're a value investor where you're trying to find cheap stocks, Benjamin Graham had his net theory where basically he was trying to buy businesses that were less than the value of the actual assets of the company. So he was very much looking for, deep value in that instance. Or whether you're looking for momentum, which is, of course, the flavour of the month and has been proven here in Australia to drive excess returns for quite some time. As Eugene Farmer once famously said, great academic, I should say, in the finance space, he said, momentum is the extreme outlier. It's the one thing that you can't actually model. And at the end of the day, though, the reality is that it's a strong contributor to overall portfolio returns. If it's going in your favour, of course. If it's going against you, it's a big detractor. So I don't mind using the concept of value as this idea of finding a great business. But then the question is, what defines that? For some people, finding really dirt cheap stocks where they've been absolutely punished by the market is not ideal because they're not comfortable trying to catch a falling dagger, as they say. Whereas for some, they don't want to look at just quality because that means you could be purchasing stocks at nosebleed price levels. Or they might not like momentum because it is somewhat a bit of a dark art and can't be easily explained. So if you want to find combinations of all three, that's what our overall stock rank does. And that could constitute a concept of value, as it were, if you want to find, good, cheap, strong stocks. But ultimately, what defines a value opportunity for someone, value in the sense of being worthwhile, that will depend on the way that they want to invest. And then what the various metrics that relate to that method, what they actually look like. It's a really interesting point because, I'm thinking of companies like Pro Medicus, for example, which is one of our most expensive stocks on the stock exchange. It has a PE above 100, but it's been overvalued since the price was $13. Today, it's well over 80, if not touching 90. So it's a little bit in the eye of the beholder, value, and therefore, if you know what you're looking for, you can find valuable investments relative to the way you want to invest.
So getting back to Pilbara, what are the risks involved in this particular company?
Well, obviously, the biggest risk is the price of lithium. Now, notwithstanding the fact that
it's a commodity company, and that's the basis behind any risk behind any of these companies.
It's a price taker. You can't dictate to the market, I'll just tap on an extra 5% just to cover my costs. No, they've got to take what the market's willing to give them. So if you've got rising costs in your business, as many miners have been having in recent times, and to be frank, with the exception of gold stocks, this has been a real problem for a lot of mining stocks in recent times, where the commodity price has actually been either going sideways or downwards, yet their costs have been going up, which means that margins get squeezed, and therefore the company's not as profitable as it was. So obviously, the lithium price is a big risk for someone like a Pilbara, because if lithium prices continue to fall, then that's an issue. The other thing to note is that this is not just a lithium stock or lithium, the commodity. It's actually an operation. So they do have mining operations. They've got processing operations. They've got 2 processing facilities. Now, any technical issue or something blows up, could be a strike on site or something like that, who knows? But that will be an obvious risk for this particular business. And further to that, they've just recently approved plans to actually increase their level of production up to around 1 million tonnes per year, which is an extraordinary amount. They currently sit around 620,000. That's going to involve costs. So they're going to have to pay more money. They're going to have to go down there and go down that path. They're doing other things, like, for example, now, this is where risks also become opportunities, where, for example, they've also recently agreed to produce a demonstration plant for midstream lithium, which is basically, they're at the base level where they're extracting lithium, but then they send it offshore to someone else to then do the rest of the processing. Well, now they're looking at actually doing a little bit more of that processing higher up, capturing more of the value chain. And they're doing that with a listed company by the name of Calix. And for those that don't know, they're involved in things like carbon capture, for example. So if they're able to do this midstream lithium processing with this carbon capture technology and make it work, it could be potentially quite lucrative given its reduced environmental impact. But of course, it's a risk. And that's something that involves capital expenditure. They've got to put a lot of money into this. These things don't cost. You can't run these things on the back of an oily rag or smell of an oily rag, I should say. These are pretty big and distinct projects. So that adds an element of risk. The other thing investors need to note is that Pilbara has seen a massive spike in the amount of short interest in the last few weeks. Now, it's always been a little bit elevated, but now it's the most shorted stock on the exchange by some distance. While this doesn't guarantee that things are going to go bad, it does mean that there are a large group of people betting against the company. No doubt this is supported by the idea that lithium prices taking a hit in the short term will impact margins, and it's definitely something to watch.
It's also interesting, though, with short interest, is sometimes that can work to an investor's advantage. It's not always a negative thing, is it? We hear about unwinding shorts.
Yeah, short covering, as it's otherwise also known as, whereby if you're on the wrong side of the trade and the stock starts to go up and you're assuming it's going to go down, by closing your bets, effectively what you need to do is to buy back the stock that you've already sold in order to square yourself off. And that creates this natural buying pressure, which can see the price go up. But of course, most people will often take it as, what do they know that I don't know? And therefore look at short interest as a bit of an indicator as to whether there's something underlying that they need to be aware of. But beyond the lithium price and also beyond the expenditure which comes with growing, there's a number of things to like about this business from an opportunity perspective. For example, recent drilling on the Pilbara operation there basically increased the mine life by another 9 years to 34 years. So it's sitting on a very, very large deposit. Further, global demand for lithium is only going to increase, and there are expected to be shortages to come over the next few decades. So they're going to be producing right at that time, which is exactly what you want, rather than the guys looking for stuff now and you're hoping that they'll eventually get to production by the time the demand's there. Because, of course, if the demand disappears and now they're ready for production, might have been a little bit too late. So, that's definitely one of the big things. But this is a company that's going to be part of our green energy future. And it doesn't have any of those startup risks that many of those other lithium stocks do. So recent price weakness in Pilbara Minerals could actually provide an opportunity to buy into this high quality and good value business at a price which is, cheaper than what it was, say, 6 months ago, and therefore creates a bit of a opportunity for investors who are yet to have been part of this story.
Fantastic, Elliot. Thanks very much for joining me today.
Thank you very much, Phil.
Thanks for listening to Shares for Beginners. You can find more at sharesforbeginners.com. If you enjoy listening, please take a moment to rate or review in your podcast player, or tell a friend who might want to learn more about investing for their future.